The World Gold Council came up with the latest monthly central bank statistics on gold, which shows that the central banks offloaded 21.5 tons of gold in November, the first monthly decline since January 2021. But despite the net sales in November, central banks are on course of being net buyers in 2021, according to WGC. While the full-year gold demand trend in 2021 is expected to be published by the WGC at the end of this month, the data on the gold-backed ETFs was released last week. In 2021, global ETFs saw a net outflow of about 173 tons as risk-on sentiment dominated the market. The ETFs have seen net outflows for the first time in the last 6 years. The inflows seen in Europe and Asia were not enough to compensate the North American outflow. But notably, the gold ETF holdings are significantly above the pre-pandemic levels, as 2020 saw a record inflow of 875 tons. On the trading front, the bullion saw its price depreciate during the first week of this year. In terms of dollar, gold and silver lost 1.1% and 3.3% as they closed at $1,795.60 and $22.30 per ounce, respectively. On the multi-commodity exchange, gold futures lost 1.3% as it ended at 47,452 Indian rupees, whereas silver futures was down by 3.3% by closing the week at 60,607 Indian rupee. While that was with respect to the price movements, on the regulations front, market regulator SEBI has come up with rules for vault managers. This follows SEBI's proposal in September for setting up a gold exchange where gold will be traded in the form of electronic gold receipts, and this will be treated like any other financial security. The regulations lay down the obligations for vault managers and the rules for depositing and withdrawal of gold. If someone intends to deposit gold with the vault manager, they will have to make it through an accredited refinery or a nominated agency. Vault managers or their authorized persons will create and issue EGRs in the name of the depositor against their deposit. When the beneficial owner of EGRs seeks to withdraw gold, they shall place a request with the depository and the depository shall intimate the withdrawal approval to the concerned vault manager. Post-withdrawal, the vault manager will extinguish the EGRs and intimate the same to the depository. With the new regulations, we are one step closer in creating a strong gold ecosystem in India, and this will lead to domestic price discovery. The February futures of gold on the MCX was trading with a bearish bias all through the week and posted a weekly loss of 1.3%. However, the contract remains within the price range of 47,400 to 48,550 Indian rupees, within which it has been oscillating for more than a month. Although, it briefly crossed over 48,550 Indian rupees to mark a high of 48,785 Indian rupees in mid-December. Even though the price action and the indicators like the relative strength index and the moving average convergence divergence are showing some weakness, the futures should move out of this range to provide some clarity with respect to the next leg of trend. Following a rally above 48,550 Indian rupees 3 weeks ago, we had recommended to go long at around 48,600 Indian rupees with initial stop loss at 47,600 Indian rupee. But a couple of weeks back, we advised to tighten the stop loss to 47,250 Indian rupee. Traders who have this position can continue to hold for the coming week. Traders considering fresh bets can wait for some more clarity on the price action before pulling the trigger on either side. In case if the contract breaks out of 48,550 Indian rupees, it can appreciate to the immediate resistance at 50,000 Indian rupees in the near term. Subsequent resistance is at 52,500 Indian rupee. But if the contract breaks below 47,400 Indian rupees, the short-term trend can turn bearish, wherein the price could drop to 46,500 Indian rupees and could even decline to 45,920 Indian rupee. Silver futures, which was consistently testing the crucial resistance at 62,500 Indian rupees for the past 3 weeks, showed some bullish bias. So, we suggested to consider longs once 62,500 Indian rupees is breached. But last week, the contract saw a considerable fall of 3.3%, shattering the hope of the bull. Yet, the contract remains above the critical support level of 60,000 Indian rupee. As such, the trend has not turned negative yet. However, the futures contract should rally past 62,500 Indian rupees to establish a sustainable rally. So, unless the contract sees a daily close above 62,500 Indian rupees or a daily close below 60,000 Indian rupees, there will be no clarity on the next swing in price. The contract fluctuating within these price levels in the short term is also a possibility. Therefore, participants are advised not to take fresh trades and wait for silver futures to move out of this range. From the current levels, resistance can be seen at 61,300 Indian rupees and 62,500 Indian rupees, while the supports are at 60,000 Indian rupees and 57,800 Indian rupees.